China fortune lands $813 million of missed debt payments, sparks fears of further defaults under Beijing's 3 red lines. What's up, everyone? I'm Dredd. This article is courtesy of the South China Morning Post. Let's hop into the details. Concerns about rising defaults in China's property sector grew as a major developer became the first casualty of strict deleveraging rules recently introduced by the government for missing debt payments. China Fortune Land Development, ranked 43rd by sales nationally last year, said it had overdue loans of 5.26 billion yuan because of a liquidity shortage. Fitch Ratings then downgraded the developer on Wednesday to reflect the extremely high risk of buying its debt. The Beijing-based developer, which started out with a focus on industrial estates and urban property, said the default involves loans from banks and trust companies, but there was no delinquency on bonds in an exchange filing late on Monday. The company said it had 55.9 billion yuan of debt that had matured since the last quarter of 2020, and it currently only has 800 million yuan in cash and cash equivalent that can be used, leaving a huge shortfall. The company promises to repay their debt obligations. It might not be easy for them to keep that promise. Within a month, a US $530 million offshore bond will be due, then 27 billion yuan in bonds will mature between March and June, followed by another 10 billion yuan in the second half of the year, according to Fitch Ratings. China Fortune Land's financial problems have added to mounting worries about a possible rise in defaults by highly leveraged Chinese property firms. This could be the first casualty under the central government's tightened credit rules, with more defaults to come this year, said Warit Pranbaum, a credit analyst with research company Bond Critic in Hong Kong. It is more of a symptom of what is to come. The market already understands that the smaller developers will be hit hard. Regulators are anxious to avoid runaway debt from setting off the kind of global financial crisis that followed the U.S. subprime loan defaults in 2008. They then introduced a trio of debt limits on home builders dubbed the 3 red lines. The red lines, which were outlined in Beijing last August during a financial symposium, represent different limits on borrowing, liability to asset ratio excluding advance receipts at 70%, net to debt equity ratio at 100%, and cash to short-term debt ratio at 1 time. Companies would be allowed to borrow more from banks and increase their debt by 5% annually for each red line threshold they meet, for a maximum yearly debt expansion of 15%, starting from January 1st of this year, according to the Economic Information Daily. 7 of the 30 biggest developers listed on stock exchanges are currently tagged as red under the new guidelines, according to a January 11th report by Northeast Securities. Thank you for watching this video. If you found it informative, please consider giving the channel a subscribe.